One of the financial industry's most lucrative careers is investment banking. Just in the US alone, investment banks generated nearly $50 billion in income in 2021, and you're not alone if investment banking seems like a foreign language to you. Even banking specialists continue to be perplexed by the complexity of this high stakes industry. Nevertheless, given that wages begin at over $100,000 a year, it's understandable why so many people aspire to be the next Wolf of Wall Street. Others simply want to know how this glamorous sector operates. Sadly, it's not all boats, champagne, and nightclubs. Some investment bankers put in over 100 hours a week at their incredibly demanding job. And after all, Patrick Bateman's Trigger in American Psycho had to be something. So, what exactly is investment banking then? What makes it so profitable? And what distinguishes investment banking from commercial banks? Let's find out. Let's go back in time to the beginning of investment banking before we describe how it operates today. Beginning in the early 19th century, American commercial banks carried out the tasks that we now associate with investment banks. But everything changed during the Civil War. Philadelphia businessman Jay Cooke is where the story of investment banking starts. Now, to aid in the financing of the federal government's war operations, Cooke founded the very first investment bank in the United States in 1861. As a result, one of the investment bank's early customers was the US government. See, in order to finance the nation's then rapidly expanding economy and infrastructure projects like building the railways, the government had to issue what are called bonds. Bonds, which are utilized primarily to finance pricey undertakings, function kind of like an IOU between lenders and borrowers. Investment banks would frequently purchase these bonds and then resell them to individual investors for a profit. Now, almost the same thing is done by investment banks today, although with different partners involved. Now, where are all those billions of dollars of revenue coming from? That's the big question. The business model is actually quite straightforward. Investment banks buy securities or assets with monetary worth and then resell them to third parties in exchange for a commission. Underwriting is the name of this procedure. So then why don't customers and investors just save their money and complete the transaction themselves? Well, it's the fact that the middleman is actually in charge of delivering the securities. Control is one of the main benefits of engaging in this type of transaction. If you think about it, investment bankers are essentially risk-taking intermediaries between clients and investors. Now, investment banks are not the only ones who do this. Commercial banks also do this and they assume similar risks, but the distinction in this area is size. Smaller loans, like individual mortgages and small company loans, are provided by commercial banks to individual and small-sized businesses. Through the interest that they charge on these loans, the commercial banks are profitable. Investment banks, on the other hand, take substantially bigger risk. They serve as a link between large corporations and risky startups. The fees they receive from this process might be very substantial. And in principle, everything here seems terrific, but let's face it, investment banking doesn't have a stellar reputation. The subprime mortgage crisis of 2008 was one of the biggest financial catastrophes in recorded history and it affected all of us. And this is what transpired. By decreasing the federal funds rate in 2001, the Federal Reserve improved bank liquidity. This made it possible for US banks to extend additional loans. To achieve this, banks relaxed their requirements and began lending money to just about anyone, regardless of whether they had a job or any money at all. Subprime mortgages are what they called these. However, you could choose to consider them as undesirable debts. Commercial banks obviously couldn't just keep making these loans, therefore, they sold their existing loans to investment banks to make way for new debtors. Now, these subprime loans were repackaged by investment banks, who then sold them to investors without making it clear how risky they were. But at the time, it didn't really seem to matter. Borrowers were purchasing homes, investors were making money, and banks kept selling their loans so that they could continue making new ones. It was like one big celebration, but every party is followed by an even bigger hangover. Interest rates began to increase after several years of prosperity, and everyone became alarmed when subprime borrowers started filing for bankruptcy because they were suddenly unable to repay their loans. This was the biggest banking crisis since the Great Depression, and it had decimated the American economy in a matter of months. With the reckless trading, investment bankers were responsible for the huge bubble that resulted, and when that bubble collapsed, everyone was affected. You're now likely convinced that investment banks are bad and that we'd be better off without them, right? Wrong. See, there have been many crises in the history of banking, including the subprime mortgage crisis of 2008. There have been previous market crashes, and there will definitely be more. But, despite its shortcomings, investment banking has played a crucial role in the development of the United States. Without the assistance of investment banks, the first railways, mines, and IT businesses would not have existed today. We'll also need investment banks to assist in rebuilding America as we move towards an environmentally friendly future. So, what does the future of investment banking therefore hold? Well, Many people have predicted that crowdfunding websites like Kickstarter will replace traditional sources of funding for creative enterprises, but it likely won't happen that fast. While crowdfunding can undoubtedly aid in the launch of small projects, it's insufficient to assist in large things like a renewable energy revolution that the world so sorely needs. Investment banks, on the other hand, have already started investing billions of dollars into alternative energy initiatives. Of course, other types of energy initiatives can also profit from this. And investment banking will likely be involved in every breakthrough that changes the world in the near future. Large investors are always needed by businesses, and investors are currently and constantly looking for new opportunities. And that's why investment banking will always remain popular. Thanks everyone for watching, and if you like this video and want to learn more about the stock market, its news, investment banking, and investing overall, give this video a thumbs up, smash that subscribe button, and comment below on what you'd like me to cover further.